everyone. Thank you so much for coming to my session. My name is Jessica Xu. I'm Vice President of Data Science at Octane. Today, it's my great pleasure to discuss with you Octane's innovation in leveraging AI and alternative data in income verification. To set the conversation in the right context, I'd like to first introduce Octane. Octane is a fintech lender specialized in financing recreational lifestyle purchases. We take pride in offering instant financing with speed and ease in the entire buying journey for recreational vehicles, outdoor power equipment, and more. And we do that by combining cutting-edge technology, innovative data science, and knowledgeable, friendly services. Octane was founded in 2014 as a marketplace lender. Later, we launched our in-house lender and servicing arm, Roadrunner. Today, we are a $1 billion company in terms of outstanding loan balances. Throughout our journey, we stayed true to our mission of connecting people with their passions by making it fast and easy for more people to finance recreational lifestyle purchases. So Octane is a full spectrum lender. We lend to prime, near prime, subprime sectors. But we do more than other lenders in covering more consumers to fulfilling their dream in lifestyle purchases. A lot of the power sports vehicle enthusiasts, they're young, they're adventurous, they're Gen Z, so they're still building their credit bureau file. We also have the honor to serve a lot of veterans who served our country. Many of them did not have a credit card in the entire military service, so they might not have a substantial footprint on credit bureau either. There are 53 million consumers in the US who are thin file, no score, credit invisible. These are consumers who are underserved in today's FICO score-centric lending ecosystem. Octane serves the underserved by looking beyond their credit score and looking at their forward-looking cash flow. Income data is the centerpiece of cash flow underwriting. So this is a topic I'm going to deep dive into today. So how do we know applicants' income? Well, you can ask them. So Octane collects self-reported income on application. The applicant may or may not be truthful in stating their income on application. So for lenders to get accurate income data, many of them, including Octane, needs to do income verification. The fact, however, is that 1 out of 3 applicants will walk away if we ask them to provide income documents such as W-2 or pay stub. So the challenge is how you balance the need to get accurate income data to do cash flow underwriting versus the need to avoid friction in the instant financing experience. So Octane's solution is twofold. First, we use AI to identify the minimum possible set of applicants requiring income verification. Second, we leverage all sorts of alternative data to automate verification to the extent possible. So basically, there are 2 fundamental questions. Number 1, who should we verify? Number 2, how do we verify? I will explain Octane's innovation in addressing both of these 2 questions. So starting with the first question, who should we verify? Every day, there's thousands of applicants coming in. When we design the solution on who should we verify, There are 3 principles. Number 1, we want to identify the minimum possible set of applicants to verify. Not only does income verification carry a lot of operational cost, it conflicts with our mission of providing instant financing with speed and ease. Number 2, we still want to maximize the capture rate of people who lied about their income. Number 3, the solution needs to be outcome-driven. What do I mean by that? As a lender, the outcome that ultimately matters is the loan amount we lend out. So the solution on who should we verify should be tied to the impact on the loan amount approved for the applicant. So let's look at this illustration of 3 applicants. All 3 of them stated 8,000 monthly income on application. If we go through income verification for each of them, we will discover that the first applicant overstated his income by $500. The second one by $2,000. The third one by $3,000. So who among the 3 should we verify the income? Should we verify 1 of them, 2 of them, all of them? Octane developed an AI detector, which will sound an alarm when, and only when, the magnitude of income manipulation is big enough to impact the loan amount approved for the applicant. The AI detector was developed based on data of applicants for whom we know both the self-reported income and the true income. So these are historical data for applicants who actually went through income application verification. That's how we know their true income. We then did simulation to simulate the loan amount based on the self-reported income versus based on the true income. When we do the simulation, we use all the possible data points for the applicant. So mechanically, we combine all the other data points about the applicant, their credit bureau file, the vehicle value, their rent-own status, with their self-reported income. We pass that through our credit policy to see what would be the loan amount approved for that combination of information. So that's loan amount A. And then we combine all other data points about the applicant with the true income. So that gives the loan amount B. The alarm will sound only when the loan amount based on income A is greater than the loan amount based on income B. So this is when verification is required. When you think about it, what really happened is this AI detector is detecting patterns and the degrees of inconsistency in the information about the applicant, including the self-reported income. When the level of inconsistency in the data is intolerable, that's when the alarm will sound, and that's when we need to interrupt the application experience and verify the income. So with this solution, let's go back to our illustration of the 3 applicants. So the first applicant, the loan amount based on his self-reported income is $10,000. If we go through income verification, we'll find out that he overstated his income by $500. But that does not change the loan amount approved for him. So should we verify? I would say no, because there's no point to create friction in his application experience, because by correcting his income by $500, it does not change the loan amount approved for the applicant. The second applicant, the loan amount decision based on the self-report income is $10,000. If you go through income verification, you discover that his true income is only $6,000. And the loan amount based on $6,000 of true income will be $8,000. This is the case we should intervene and verify the income, because the verified income will lead to the right lending decision The third applicant, he overstated his income by $3,000. However, when you compare the loan amount based on income A versus income B, it's the same. Why is that? This is the case that all the other information about the applicant points to the direction that this is a risky borrower. Overstating his income by $3,000 doesn't move the needle to change the outcome. So should we verify his income? I would say no. Again, there's no point in creating friction in the application experience because it does not change the loan amount approved for the applicant. So by designing such an AI detector, we can isolate the minimum possible set of applicants that needs to go through income verification. Now moving on to the second question, how do we verify if we decide that this applicant requires income verification? Well, you can ask for income evidence, but as I point out, 1 out of 3 applicants will walk away if you ask for their pay stub. So Octane's solution is we leverage various alternative data to enable digital verification to the maximum. There are digital income verification tools out there. So I will mention 2 mostly commonly used ones. Number 1 is payroll data. So this is when you send the name of the applicant to a payroll data provider. They will return the payroll records matched to the name. The limitation is that even the most comprehensive payroll data network today only covers 30% of all the workers in the US. For our business, a lot of our customers are drivers, contractors, self-employed. So they tend to be even more invisible on traditional payroll data network. The second solution out there for digital verification is a consumer credential-based solution. So this is the applicant will give you consent to use his or her banking credential to scan his or her bank statement to see whether there's a recurring direct deposit that supports the income level. The challenge for Octane is that 90% of our loan applications are processed at our dealer partners. So it's very challenging to install a consumer credential-based solution on all of our dealer platforms. So Octane's solution is we constructed a holistic picture about the applicant income by triangulating his application income with all sorts of alternative data. We look at payroll data. Actually, we look at more than 1 payroll provider to maximize the coverage. We look at earnings on your previous employment if you are not currently active on payroll or in between jobs. We look at your historical spend and payment amount on credit bureau file to see whether your spend and repayment pattern supports the income level. So essentially, we designed a smart workflow that we first compare application income with source A. If that drives to a verification outcome, we stop. If not, we continue to pass on the application income to compare with all other sources. So there are a lot of factors to consider in designing this workflow. Some sources are more reliable than others. Some sources are more expensive than others. So when we design the workflow, we have to balance the cost, the effectiveness, the complexity, and also have to be very smart in designing the resolution logic. Under what condition would you consider the income being verified? But by doing it in an intelligent way, we can significantly reduce the amount of applications going through manual verification. Again, this is a case that we have to ask the applicant to supply income documents. So the combination of these two initiatives, again, number one, build an AI detector to isolate the minimum possible set of applicants requiring income verification. Number two, leverage all sorts of alternative data to automate verification to the extent possible. The combination of these two initiatives generate phenomenal business outcome. If we look at manual verification itself, it was reduced by 5x. So let's see, we used to manually verify 10 out of 100 applications. Now we only manually verify 2 out of 100 applications. And the reduction in manual verification have a direct impact on both the top line and bottom line of Octane's business. Loan origination increased by 20% because more applicants are willing to take our loan. And this is achieved by less operational cost used in inspecting applicants' income documents. And the positive business impact does not stop there. When we look at our dealers who are an integral part of Octane's ecosystem, they're happier. Now they have more loan volume to work with, and their loan process needs to spend less time inspecting, collecting income documents. Our customers are also happier. Who doesn't like a fast, easy, frictionless financing experience? They're willing to promote our brand on our behalf. So I hope that provides a concrete use case how a lender can leverage artificial intelligence and alternative data to automate their process and enable a better customer experience. And now I will open the floor for questions.